Good morning. I am Sudarshan Sukhani and today is 4th April 2022 Monday. We are just beginning the new week for trading. Last week the markets had a very decent rally, so I am explaining this whole story to you with this chart. This is the chart for the Nifty. You can see the white and the black candles. Most viewers will understand this chart immediately. It's a daily chart. I have applied a fast moving zero lag moving average to this chart. When you use zero lag moving averages or fast moving averages, the trick is to identify the direction of the average. So at this point the average turned up, the trend was up. Here is the point at which we would have bought because there was a gap up, the high was taken out and the average had just turned. Since then, and this is what? This is the opening price was 16,000. So 16,078 was our entry price for this uptrend. Since then, see, the moving average has not turned down. It has been moving up consistently till the markets have reached 17,650. So this move was almost 1600 points, about 10% for the Nifty, and of course for a trader who was following it. I'm not sure how many short-term traders took the entire move, but the important point in this kind of a chart is to say what is the trend, and from here onwards the trend is up. If the trend is up, we want to be only buyers in our intraday or our swing trading. This is what I have been explaining to you, that we should be looking only to buy because the trend which is shown by the daily chart, that trend is up. So what happened? Then finally I explained to you that there were three of these long shadows and there was a narrow range here which broke on the upside. Again 2 days of narrow ranges, then the narrow ranges again broke on the upside on Friday. So the trend so far, as depicted by the zero lag average or as depicted by the prices, the movement of prices, higher low highs, higher lows, whatever the way you look at it, and breakouts, the trend is up. If the trend is up, we don't want to stand in front of the trend. So today also the idea would be to stay long in this market, but remember, every trend matures at some time. So the trick is to tighten our stops. It is not to stay away, except sometimes 1 or 2 days we say okay, we will stay away, but otherwise usually we go with the flow of the market. The flow of the market is up. Stay on the long side, but keep your stops tighter now. And what should a stop be? See, the low of Friday 17,422 should be our final stop, this. But 17,422 can be 300 points away from the opening price today. So for today and for any position trades or swing trades or day trades that we take, we wait patiently till 10 AM and the low made in the first 45 minutes of trading will become our actual stop. This is our fail-safe stop. We will not stay long below 17,422, but the actual stop would be much higher, the low of the first 45 minutes of trading. The trend is up, every trend matures, but we do not say when it will mature, we just go with the flow. We manage the maturity, possibility of a maturity of trend with our risk management, with our money management. We don't question it. Have a good day, enjoy yourself. Thank you for watching these videos. Jai Hind.